The Nightly Business Report on Vermont ETV is funded in part by the DPM Group of Montreal, independent brokers of full financial services, dedicated to a tradition of financial security and peace of mind, and by members like you.
New evidence from a variety of sources confirms that the economy is slowing. Good evening, I'm Cassie Seifert in New York.
And I'm Paul Kangas in Miami. The upward momentum slows on Wall Street, but the Dow Jones Industrial Average still manages to close at another record high.
Nightly Business Report is made possible by Digital, doing whatever it takes to make information work for people and not the other way around. Franklin & Templeton Worldwide formed the more than $115 billion Franklin Templeton Group, a global alliance of mutual funds and investment products distributed by investment professionals. A.G. Edwards, going beyond stocks and bonds to help you create the right plan for a more secure retirement. A.G. Edwards, an investor's resource for more than 100 years. And is produced in association with Reuters, which provides news and market data on the equity, bond, futures, and foreign exchange markets.
In the latest sign of economic weakness, a mosaic of reports released today shows the manufacturing sector of the economy shrinking significantly. But economists say a recession is still unlikely, as Suzanne Pratt reports.
The first numbers showing how the economy performed in May are out, and they show things were moving a lot slower than many economists expected. According to the closely watched survey by the National Association of Purchasing Management, growth in the manufacturing sector came to a grinding halt last month for the first time in almost 2 years. The association's index dropped to 46.1 in May from 52 the month before. A reading below 50 indicates production at the nation's factories is shrinking. But economists say although the predicted economic soft landing could get a little bumpy, it's still on track.
I think the risk of a recession is still remote. Even the purchasing managers indicate that the index has not fallen to levels consistent with what they think of as a recession. They regard anything less than 44 as consistent with a recession.
Consistent with a purchasing management survey, the government reported factory orders fell 1.9% in April, the biggest decline in 9 months. Economists attribute much of the manufacturing slowdown to a cutback in consumer purchases of big-ticket items. That's not surprising, considering another government report which shows Americans' personal income rose 0.3% in April, the smallest increase in 5 months. Personal spending kept pace, climbing by the same amount.
Clearly, the numbers suggest that there is a slowing pattern, both in income and consumption. The consumer, I think, is increasingly cautious because debt has built up, especially in 1994, and it now costs more to service the debt.
Economists say today's economic data clearly shows an economy that is losing momentum quickly. But most still say they do expect the consumer at 2/3 of the economy will keep it from tumbling into a recession. Suzanne Pratt, Nightly Business Report, New York.
Stocks on Wall Street tried their best on today's opening to follow through on yesterday's hefty 86-point run-up in the Dow Industrial Average. But the blue chips began fading after traders saw that significant decline in the Purchasing Managers Index and the 1.9% drop in April factory orders, which renewed fears that the economy is slowing down a lot more than yesterday's gross domestic product report suggested. By noontime, then, the industrial average fell to an 18 1/3-point loss. The sell-off, however, was cushioned by a firmer, broader market, which was 11-9 positive, and by strong bond prices. These factors gradually helped the Dow Jones Industrial Average push on to a closing gain of 7.61 points at 4472.75, its second straight record high. And the Dow closed nearly 6 points below the day's high, but it was up more than 35 points from the low of the session. A nice comeback indeed. Trading volume, however, dwindled a bit, some 11 million shares lower than yesterday, but more up volume than down volume by a comfortable margin. The Dow Transports fell 4.66, utilities down 0.79. The closing tick still bullish at plus 477. Standard & Poor's 500 with that small 1/10 point gain did set a record high. The 100 had a record with a gain of 2/3 of a point, and the mid-cap 400 with nearly a 1 point gain set a record high. Commodity Research Bureau Spot Index gained 1.19. A record high in the New York Stock Exchange Composite Index with that gain of 0.29. The value line within about 1.5 points of a record with that gain of 0.5 point. And the Wilshire 5000 did indeed hit another record high with that gain of just over 9.5 points. After the market closed, the Federal Reserve reported in the week ending May 22nd, the M2 money supply rose $7.6 billion. Because today's reports on new factory orders, personal income, and of course the Purchasing Managers Index all pointed to a decidedly weaker economy, the bond market took heart in the belief the Federal Reserve would now be more inclined to ease interest rates to stave off any further move toward recession. Bonds gave back some of their early gains, though, when the dollar faded, and May retail sales showed a modest increase. Even so, both tax-free and corporate issues closed with quarter-point gains on the average, and the long-term government market ended up 14/32 of a point, bringing the yield down to 6.62%, the lowest in 16 months. The Lehman Brothers Long Bond Index up exactly 5.5 points, and Fed funds fell from yesterday to close at a flat 6%. Later, I'll show you where the action was on Wall Street today.
Sales at the nation's retail chain stores perked up in May as warm weather helped lure shoppers back to stores. Walmart saw its sales at stores open at least a year rise 5.6%. Kmart had a smaller gain of 4.3%. At JCPenney, sales climbed 4% for the month, while sales at Sears rose 3.5%. And among specialty retailers, the Limited posted a gain of 1%, but sales at the Gap fell 2% in May. With me now, New York is retail analyst Patrick McCormick of Dean Witter Reynolds. Patrick, are these numbers enough to convince you that the consumer is finally back in stores?
I think they're back, although not to the degree that they were a year ago. Sales were relatively strong this month, and it was an uptick from the past several months, but the consumer is not back in full strength.
How do you explain this at times when the stock market is making new highs, generally a positive economic feeling in the country, but people just aren't going to stores?
Well, I think they're not going to buy hard goods or consumer durables to the degree they were a year ago. Higher interest rates have led to slower home sales, so the durable goods segment of the business has slowed down, and overall that's, kept a lid to some degree on retail sales growth.
Apparel sales, especially women's clothing, have also been a very weak area. How do you explain that?
Well, I think what you're seeing in the apparel business is that there's not much inflation. In fact, there's been deflation. So in unit terms or in nominal terms, growth has been pretty good. It's been masked, however, by deflation. So in dollar terms, growth is not all that great. It's a good deal for the consumer. Price points are lower than they've been, and discounters and department stores are taking market share away from the specialists in this area.
So in fact, people are buying clothing, but it's just not showing up in the numbers.
Right, they're buying in unit terms, and because of deflation, you don't see it visibly in dollar terms.
Retail stocks have underperformed the market this year pretty significantly. Do you think that they're the next sector to tick up, or do you think that they're going to continue to underperform for a while longer?
I think most of the pain is behind us. The big underperformance period has already occurred. I think from here, the stocks will probably track the market, and I think probably more important than the group call are the individual stocks. This is as we say, a zero-sum game, and so for one company to win, they have to take business away from another company.
We're just about out of time. Can you name one or two stocks that you like best?
A couple that I like are, one is Dayton Hudson, where I think you're going to win either on a turnaround or a breakup of the company. And we really like the office products superstore area, including Office Depot and Office Max.
Okay, great. Thank you very much for joining us.
You're welcome.
Patrick McCormick of Dean Witter Reynolds.
One troubled retailer, Kmart, says it will close 72 of its U.S. discount stores and cut 5,800 jobs as part of its ongoing restructuring. The nation's second largest retailer currently operates 2,300 stores in the United States and overseas. Kmart Executive Vice President Donald Keeble says that the stores to be closed do not meet the chain's return on investment requirements. The company did not identify the locations of the stores. No change in Kmart stock at 12 3/4 today. Well, it's no secret that CBS has had a tough year, and that was the main topic at the annual meeting of CBS affiliates held in Los Angeles this weekend, or this week, I should say. As Reuters correspondent Kevin Smith reports, the network's affiliates found some encouraging signs, but had lingering doubts about the big picture.
If it's broke, fix it, came the cry from CBS affiliates who gathered to hear CBS executives detail their plans to turn around the troubled network. The company's problems are mounting. A third-place finish in prime time. a nasty controversy over the decision to remove Connie Chung and keep Dan Rather as sole anchor on the evening news, and a frontal assault from Fox, which lured away NFL football and induced a number of former CBS affiliates to defect.
Just think of me as carrying the torch.
CBS has shaken up its fall primetime lineup, bringing 11 new shows to the party, including Central Park West, from the creator of Fox hits Melrose Place and Beverly Hills 90210.
We need to lower the average age of the viewer to the CBS television network. We need to appeal to a broader audience and include younger people in that audience.
Tisch promised that Lund, new president of the broadcast group, would have a free hand, a move applauded by affiliates because Lund, unlike Tisch, has a broadcasting background. After a deal to turn CBS operations over to Barry Diller fell through last year, Tisch has reportedly been negotiating a sale of CBS with Ted Turner, Disney, and others, whom affiliates would clearly prefer.
I would say the majority believe that it's time for Mr. Tisch to sell. These are people who have vision about this business and this industry, and it would bring new excitement and new life to this network.
But so far, potential suitors have balked at Tisch's rumored asking price of $80 a share.
The potential upside for CBS, if somebody can turn that around, $80 a share, which would certainly be a very realistic price to expect.
While somewhat hopeful, many CBS affiliates still had a nagging question: whether changes in management without changes in ownership will provide the vision necessary to restore the CBS eye to glory. Kevin Smith of Reuters for Nightly Business Report, Los Angeles.
Still ahead on Nightly Business Report, Japan's economy succumbs to a string of disasters. Several automakers reported vehicle sales for the month of May today, and the results were mixed. Among the big three, only Chrysler was out with vehicle sales, and its results were lackluster, up just 1.7% from the same month last year. Toyota had better results. Its sales of American-made models jumped more than 35%. Honda and Nissan saw smaller gains. GM and Ford will report on their May sales within the next few days. Meanwhile, there's a new development in the auto trade dispute between the U.S. and Japan. The U.S. ambassador to Canada today said talks aimed at resolving that dispute will begin in Geneva on June 16th. Meanwhile, Nissan said today it will stop production of U.S.-bound luxury cars for the next 10 days. And two other Japanese automakers, Toyota and Mitsubishi, are also curtailing shipments of luxury cars to the U.S.
The problems of Japanese automakers are likely to worsen that nation's unemployment problems. Just this week, the Japanese government reported unemployment of 3.2% in April. That's a 42-year high. As Lucy Kraft reports from the Japanese capital, that news has shaken faith in the government and increased concern about Japan's weak economy.
Terrorist attacks by a religious cult, a major earthquake, bizarre weather, and a surging currency. Catastrophe of almost biblical proportions has plagued Japan over the last year or so, and experts say this string of disasters has finally squelched what had been a gradual economic recovery.
It's been a combination of, bad weather, bad luck, adverse currency movements for some, good for others, and this investment collapse.
With 1995 forecast to be another zero growth year, unemployment is expected to continue hitting new records to the tune of as much as 4% this year.
Now the Japanese companies have many people who don't have enough work, so it is very difficult for the Japanese firms to employ more people.
Particularly frightening is that while the economy spins out of control, the coalition government appears helpless to do anything about it.
There's a sense of paralysis that's falling over the government right now. So there's not a lot of coordination, there's not a lot of leadership from the top, and this has hamstrung the ability to react to adverse economic shocks.
As the world's second largest economy, Japan's predicament is troubling for the U.S. Japan is one of the biggest customers for American goods. And if the economic downturn continues, it could also drag down growth in the U.S. Lucy Kraft, Nightly Business Report, Tokyo.
Well, prices on Wall Street made a nice comeback today. The Dow Industrial Average particularly coming from over a 20-point loss to close up at a new record with that gain of 7.61, 12 stocks higher for every 9 lower, 160 new highs for the year versus only 11 new lows. Ford Motor topped the active list on 8.5 million shares, up 3/4, followed by Merck down, or I should say up 1/4. Micron Technology in the strong semiconductor group today up 1 3/4. Telmex gained 1 7/8. Mexican market had a big rally. The IPC Bolsa Index up 66 2/3 points, or 3.4%. PepsiCo, fifth in volume, down 7/8. Chrysler gained a full point. General Motors down 1/4 point. Stone Container rose 1 1/8 points, getting a lift from Merrill Lynch, which upgraded it from neutral to near-term above average and increased earnings estimates on Stone Container. AT&T, no change. Walmart, 10th in volume, down 1/8. Delta Air did well, up 1 1/4 on news apparently that Aeromexico has signed a pact with Delta for flights to Madrid and Paris through Atlanta. Eastman Kodak up 1 1/8 after gaining a 0.375 yesterday. Hewlett-Packard a 2-point gain as the comeback and the high-tech stocks did well today. Norfolk Southern, little weakness in the rail group while the airlines did well today, down 1 1/4 there. Texas Instruments up 5 3/8. Soundview Financial Brokerage increased 95 earnings estimates on Texas from $11 a share to $11.15 and also boosted 96 earnings estimates. United Technologies, a Dow stock, doing well, up 1 5/8. High Shear Industries, second day in a row, best percentage gainer today, rising 1 3/4. Yesterday, it gained 1 1/8 after getting a favorable court ruling absolving the company from $11 million in government contract liabilities. Grupo Televisa up 1 3/8, along with that strong rally in the Mexican market. Kroger Company up 1 1/8. First Boston began covering the stock with a buy recommendation today. Whitaker Corporation, an electronics for aerospace company, down 1 3/4. Second quarter earnings out today, only 2 cents versus last year's 20 cents. Sales of 10%, increase of 10%, sales offset by a special 20-cent charge because of research and development write-off. Potash down 2 1/4 points. J.P. Morgan downgraded the stock from a long-term buy to a market performer. Donaldson Lufkin also cut earnings estimates. Stock traded as low as 44 1/4, but came back a bit after NatWest Securities repeated a buy. Melville, the apparel and shoe retailer, down 1 3/4 after reporting May same-store sales actually fell 0.7%. NASDAQ trading, a gain of 4.24 on the index there, now at a record high, but volume down from yesterday, about 17 stocks up for every 16 lower. Intel topped the active list, up 2 1/2 points. Microsoft down a fraction. Cisco Systems up 1 3/16. Applied Materials up 2 3/8. Cordis, a casualty, down 6 1/4 points after Cowen and Company Brokerage downgraded it from strong buy to just buy. The stock traded as low as 61 today. 3Com up 1 15/16, 8-point gain for Amgen. Oracle up 7/8 point. Novell gained an 1/8, and Informix did well, rising 2 7/8. Questec up 3 1/4 points. The company won a $300 million U.S. Army procurement contract. The company's in the warfare information business. Advanced Semiconductor Materials up 3 1/4 points. It's a Dutch company whose stock was down 15% early in the week, apparently a technical rebound, no news. And Micron Gaming losing 2 points. Tucker Anthony Brokerage downgraded it from buy to sell. And the company says it's probably just going to break even in the second quarter. American Exchange Index down 1.20 today. Volume about the same as yesterday. 6 more stocks closed with gains and losses. Viacom B on a hefty 3.2 million shares topped the active list, down 1 3/8. Identix, the biggest percentage loser, down 15/16. Digital Biometrics has filed a patent infringement lawsuit against Identix. And Organogenesis down 1 full point. Stirs' medical investment letter today was very bearish and says they look for the stock to go to $3 a share within a year. That's our Wall Street wrap-up.
Negotiators for the United States and Great Britain meet for a second day in Washington tomorrow as part of a new push to reach an open skies agreement. That goal has eluded the two nations for 5 years. And as Reuters correspondent Jim Bolden reports, the main sticking point is space at London's main airport.
50 million passengers passed through London's Heathrow Airport last year. Good reason all international carriers want wing room here. Currently, however, the only U.S. airlines which can fly to Heathrow are American and United. And United is not even allowed to fly directly to Chicago, its home airport. That may change by this summer if U.S. and U.K. negotiators can wrap up talks this week in Washington. They have been trying for years to come to agreement.
Our economic analysis indicates that the agreement that we have on the table with the British would be in our interest It is balanced, but it is in our interest.
The so-called Mini Open Skies Agreement is expected to allow United to fly from Heathrow to Chicago, while giving British Airways one additional flight and continue to code-share flights with U.S. Air.
For us, a mini deal would confirm our second daily flight between Philadelphia and Heathrow and would really free up the code-sharing issues.
But for those U.S. airlines which have opposed BA's part ownership of U.S. Air, this deal is nothing but a sellout to the British.
The U.S. agreed to negotiate an entirely inappropriate mini deal, which, if consummated, will increase British Airways' advantage even further in exchange for special treatment of one U.S. airline, United.
This proposed deal has been years in the making, but is far less ambitious than originally planned. And though Washington hopes to start new talks right away on broader issues, analysts say it may take many more years for the UK and the US to open up further. Jim Bolton of Reuters for Nightly Business Report, London.
Coming up in tonight's commentary, economist Burl Sprinkle talks about the Fed and the dollar.
The new head of the World Bank says he's worried about foreign aid cutbacks from the U.S. Congress. Investment banker James Wolfensohn, in his first day as World Bank president, told a packed news conference he hopes the U.S. won't reduce its commitment to the International Lending Agency.
It's something which I think, were it to happen, is not in the interests of the world. It's not in the interests of the bank. But most importantly, it's not in the interests of this country, because our lending overseas has generated jobs in this country. This is not just a fiction, not just a piece of advertising. It is in fact true that many of our major export markets come from countries that we've helped.
Wolfensohn also said he's confident Mexico will work its way out of its financial problems. Former executives of American Honda were convicted today of accepting kickbacks in a bribery scam. Prosecutors say it's the largest commercial bribery case ever in terms of money changing hands. Janice Jocelyn, former West Coast Honda sales manager, and John Billmeyer, former senior vice president, were convicted of taking bribes from dealers in return for favorable treatment and getting cars and dealerships. The scheme reportedly involved $15 million in bribes. Yesterday, the Federal Reserve launched a surprise effort to bolster the dollar. And tonight, commentator Burl Sprinkle of BW Sprinkle Economics discusses Federal Reserve intervention in the U.S. economy.
Since early last year, the Federal Reserve has attempted to slow real growth by tightening policy. The prevailing view has been that the fine-tuning effort was successful and that we can expect continued growth at a slower pace. Optimism prevailed despite evidence that past fine-tuning efforts were seldom successful. I just disagreed. Why so difficult? First, the data are frequently revised, so the policy official cannot know present and future trends and does not even know the past with certainty. After deciding a change in policy is justified, monetary action can be taken promptly since only the Fed is involved. But after action is taken, impact on the economy will be delayed for many months. Tighter policy action was taken in the first quarter of '94. By late fall, there was scattered evidence that the economy was slowing, and in the first quarter of '95, real GDP slowed sharply. As usual, weakness showed first in interest-sensitive sectors such as housing and then autos. Most recently, weakness in other durable goods suggests the adjustment is spreading, but further confirmation is needed. Since monetary policy has not yet eased, policy will continue to depress the economy for some additional months. the next move of the Fed should be toward less restraint if a recession is to be avoided. I'm Burl Sprinkle.
Tomorrow on Nightly Business Report, we'll find out what happened last month to a key economic indicator, the unemployment rate. That's Nightly Business Report for Thursday, June 1st, 1995. I'm Cassie Seifert in New York. Good night, Paul.
Good night, Cassie. I'm Paul Kangas in Miami, wishing all of you the best of goodbyes.
Nightly Business Report is produced in association with Reuters, which provides news and market data on the equity, bond, futures, and foreign exchange markets. And is made possible by A.G. Edwards, going beyond stocks and bonds to help you create the right plan for a more secure retirement. A.G. Edwards, an investor's resource for more than 100 years. The Franklin Templeton Group is a global alliance of over 110 mutual funds and investment products, including tax-free income funds, domestic and international growth funds, and money market funds. Digital, doing whatever it takes to make information work for people, and not the other way around. And by the financial support of viewers like you.
Join us again tomorrow evening at 7 p.m. for the Nightly Business Report. And be sure to tune in each weekday morning at 6:45 for the Morning Business Report. Coming up tomorrow night at 9, a two-part series, Profits and Promises, focuses on opportunities in the increasingly free and freewheeling international economy.
Introduce someone to the basics of stocks and mutual funds with the NBR Video Library. Paul Kangas hosts this award-winning set of free videotapes for beginning investors. To order by credit card, call 1-800-535-5864.
The Nightly Business Report on Vermont ETV is funded in part by the DPM Group of Montreal, independent brokers of full financial services, dedicated to a tradition of financial security and peace of mind, and by members like you.